All right, guys. So I'm gonna just go ahead and start here. If anyone does decide to join in later, they can definitely ask questions in chat. You can use the microphone, whatever you choose to do. With that being said, we're gonna start off with the daily time frame. Okay. So my mornings are always gonna start off with the daily time frame. Now, I'm not going to put a lot of emphasis in the daily time frame. As far as level wise, I'm definitely going to be mindful of previous day low, previous day high. Okay, that's it. All I'm going to do quickly, before each market session, before the open, in pre-market, I'm generally going to look at, what is the overall bias, right? I'm just going to let my eyes tell my brain, or vice versa, however you want to look at it. What is the chart doing? Okay, is the chart moving higher? Is the chart going sideways? Is the chart moving down? Okay, quick little bias. Now, again, just because you get a little bit of a bias, right? So if we look at the daily chart, which we're looking at on the screen now, we are trading 1, 2, 3, 4, and today is the 5th day trading below its daily 20-day moving average. Okay, very, very significant. You can see going back in the chart, right? 1 second here. You can see going back in the chart to all of this price action that we were trading above and through the 20-day moving average. So price action in this range was very, very choppy. Okay, very, very choppy. Again, it's harder to trade in those type of environments, but if you kind of look at what's been going on as of late, the trend has been down. Now, does that mean that the trend's going to continue to just go down and down and down? Of course not. Even in bull markets and in raging bull markets, raging bear markets, you're going to get those offsetting days, right? So you're going to get those days where we kind of chop around and then break up to the high side, kind of creating a little bit of floor, or you're going to get that little bit of a push higher, stuff into one of these previous day highs, and then you're going to get that next continuation leg down. So quickly, that's all I'm looking at in the pre-market, right? And even the night before. What is the daily chart doing? Give myself a little bit of a bias. Now, when the daily chart has been down like today, what I'm looking for when the market opens, even a little bit in pre-market. So again, for some of you guys, because you guys are new, I'm in California, so all of my times that I'm going to reference are going to be Pacific Standard Time, okay? Some people are Mountain Time, some people are Eastern Time, some people, whatever other time frame there is out there, right? So just correlate with what time frame I'm giving you to whatever, time zone you're in. So for me personally, at 5:30 a.m., which is an hour before the market opens, New York session, okay? Typically, there's news, there's numbers, there's headlines, okay? So around 5:30, which is an hour before the market, you're always going to get some type of move, okay? So from this daily chart, what I'm then going to do, right, after I get my little bit of a bias there, I'm going to go over to the 1 hour chart, okay? I'm going to go over to the 1 hour chart, and I'm going to at least look at, yesterday's price action, right? What did we do yesterday? What did we do in the overnight session? And what did we do in pre-market, right? So once I have this bias, I start to look at the candlesticks, right? This candle here that I'm hovering over, and let me actually put a little bit of an arrow here. This candle here is your 5 a.m. candle, 5 a.m. to 6 a.m. Okay, so this is before the market is opening. What I'm looking at is a couple of things. I'm going to look at, where's my drawing tool at here? Give me 1 second. What I'm looking at is this floor, okay? So when I'm looking at this floor, I want to see a little bit of a range. What is the overnight session highs? What is the overnight session lows? Where is yesterday's lows? Where is yesterday's highs? Okay, so I kind of mentally mark out these levels and I kind of see, what is the range that we're trading in? Now, from the 1 hour time frame, I'm only going to do one thing, okay? You guys hear me talk about that first hour range, right? If we confirm first hour lows, if we confirm first hour candle, if we confirm previous candle. Again, for some of you newer people that are in the room, it's going to take a little time to learn the lingo, right? The way I say things may be different than what you've heard before. It doesn't mean that my way is right and your way is wrong. It's just everyone has their own way of speaking, has their own trading lingo. So what I'm looking at here in the pre-market is definitely what is the first hour lows and highs, okay? So if I look at the 6 a.m. candle, right? Market opens at 6:30, 9:30 a.m. New York time. At 6:30, that's at the 30-minute mark. So between 6 a.m. and 7 a.m., I want to know what is that high, what is that low. From there, what I'm going to do is always, right? And I'm starting with a blank canvas here just so you guys can see how I start to mark this up. And this will be done inside pre-market and that first 30 minutes off the open, right? Because remember, the market opens at 6:30 a.m. From 6:30 a.m. to 7 a.m., you're going to get that first hour candle close, okay? So what I'm looking at, those first hour lows, I'm going to go ahead and mark that out, right? So I put a little bit of a price level line. You can put a trend line. You can put whatever you want. On Thinkorswim, I have the option to put, it's called a price level line. It's just going to give me the price there. Again, it's not always going to be perfect because it's going to be dependent on where I drop this. So obviously if I misplace it, I could be a few points or a few ticks off, whatever, right? The majority of what you want to see have happen here is you want to mentally train your eyes. Where is that first hour low and where's that first hour high? Okay, so from here, I'm going to mark out the first hour lows and first hour highs. Very, very simple. You're going to start to see this chart come to life, okay, as we continue. So the theory would be this. If price action confirms, right? If price action confirms where off the open, we get a little bit of a bounce, we get some type of rejection, and then we get a loss of the lows. I don't like the way that looks. A loss of the lows, you want to be short through those first hour lows. So the low of day is 17,552. That's also the first hour lows. If we have a bounce like we did, chop around, and you lose the first hour lows, this is where you're going to want to go short, okay? Now, you're not going to want to take the first entry. So I'm going to show you how to take the entry because in this particular scenario, we actually confirmed first hour highs. First hour highs were confirmed. Although it wasn't a huge move, there was an area of opportunity to go long, okay? So all I'm doing is starting off with the daily. What's the overall direction? What's the bias? Great. Go over to the 1 hour chart. What is it? What is price doing in the pre-market? Okay. What did price do yesterday? That's all I'm looking for, right? Once I see what price is doing in the pre-market and overnight, I'm kind of looking at those yesterday's lows, right? Sometimes if we're starting to trade at the range of yesterday's lows, I'll definitely mark those out, right? So I have yesterday's lows here. We're closer to yesterday's lows than we are yesterday's highs. I think everyone can kind of agree on that, right? We're closer to yesterday's lows than we were yesterday's highs. If putting on your own supply and demand zones can get confusing because you don't really remember, what is the first hour high, what is the first hour low, just mark it out on your chart, right? So again, I do all of my charting, even though when I trade prop firms for Thinkers or for Top Step or Apex, I'm trading using the Thinkorswim platform because I do all my charting here. This is where I trade options. So I do all my charting on Thinkorswim. On the side monitors that I have here, I have pulled up NinjaTrader, I have pulled up TraderVate, as well as Top Step X. I'm not even looking at those charts because I do my charting here. It's right here in the center, right? So all I'm doing is executing on these other screens. I see a setup here on my main screen. I move my mouse, I click buy, I click sell. Very simple. I don't need to mess around with a million different platforms to chart on. So the point that I'm making here is you can start to write out, right?
Positioning and, where they are kind of maintaining their level. Not necessarily for the biggest players.
I'm not sure if someone's talking to me or they're in the background. First hour lows, I'm definitely going to mark out. You can write, whatever it takes for you to understand what's first hour lows and first hour highs. You can always add previous day lows. So just way you know, right? You can either write it out, or what I've done in the past, and again, it's what works for you. What I've done in the past is this: previous day high, I'm going to change the color, right? I'm going to change the color of this line to green. Okay, green, right? Great. What is that telling me? If we get over the green line, we're breaking through yesterday's highs. Great. I'll change the previous day low to red. Very simple, right? It doesn't need to be rocket science. You can do it however you choose. And then I'll leave my first hour lows and my first hour highs. I think this red line is going to be a little bit difficult to see. We'll change it to a different color of red. My first hour candle will always be in white. Great. So now that we have these levels marked out on the screen, I come down to the 5 minute. Do you have to trade the 5 minute? Of course not. You can trade the 1 minute. You can trade the 2 minute. You can trade the 15 minute, the 30 minute. It doesn't really matter what time frame you're trading. For me personally, I like the 5 minute. Why? Because it gives me enough time where I don't feel rushed. For example, on a 1 minute chart, on a 30-second chart, on a 2 minute chart, it gives me enough time. However, the ranges are going to be a little bit bigger the higher the time frame you go, right? So if we're putting in an average of 20 points per 5 minute candle, what do you think your stop loss is going to be around on any one particular setup? It's going to be around 20 points, right? Now, obviously, if you scroll down to the 2 minute or the 1 minute chart, you're definitely going to have lower risk because the ranges are going to be a lot smaller. However, you can tend to get more choppy moves when we are in a consolidation period. Very simple. So all I'm looking to see have happen here, right? You can see where yesterday's highs are at. They're not even in play. All we're really looking at is yesterday's lows as well as yesterday's highs and the first hour high and low. Okay, very simple. On our 5 minute time frame chart, what we're looking to see have happen is one of two things. One of these 4 levels to get broken. Okay, so when they get broken, that's when you want to start looking for your setup. So when I say look for your setup, it's going to be around some of these levels and or an active 20 SMA play. Okay, so if we notice leading into the market open, right, into the market open, we were already in an active 20 SMA play short from around 5 a.m. Pacific Standard Time. Okay, so around an hour and a half before the market even opened, we were already in an active 20 SMA play. Now, for some of you guys that are in different time zones, great. Maybe it's 7 a.m., maybe it's 8 a.m., maybe it's 6 a.m., maybe it's a little bit later in the day. But for me personally, I'm not up and I'm not watching the screens at 4 o'clock in the morning. Okay, there's going to be other setups. I don't need to catch every single setup. There's always going to be another setup. So by the time I even get to the charts, I can already see what we're doing, right? Now, here's something that you can also look to trade if you are wanting to trade that open, okay? So if we're already in an active 20 play short before the market opens, I'm going to kind of look at what did the market do that hour and a half before? Did we have any significant lows? Did we have any significant highs? I can clearly see this bottom wick here, right? Can clearly see this bottom wick. I hope you guys can see this. Put a little arrow here. We can see that we've got some type of low being put in going into the open, right? So with that being said, if price, okay, breaks these pre-market lows, which it did here, and we confirm, is there a trade? Right? Now, again, could it be just an early washout off the open? Of course, right? I don't know how many times I've taken these type of trades. I've taken these type of trades where I get into the move. Whoops, that's a stupid line. I get into the move. Take this off. And next thing you know, this move comes right down and then snaps back up, right? It's the name of the game. It's going to happen, right? It's going to happen. Not every setup's going to work. But if I'm looking at these little pre-market lows leading into the market open, we get an aggressive washout, okay? Let it close, okay? Let it close. What tends to happen with a lot of newer traders that I see personally is that as soon as the market opens, price starts flying. Everyone wants to jump in long. They want to jump in short. They want to ride that momentum. What happens a lot of times is traders will jump into this move here and immediately it snaps back. And now they're trapped. Now they're blowing up accounts. Now they're going on tilt. Right now they're doing something that they shouldn't be doing because they're rushing. That's why a lot of times in the room I'll say patience, patience, patience. You know, don't get FOMO, guys. You're going to get setups each and every single day, right? Even for some of you newer people that have just joined the room, whether you've been here a day, whether you've been here, you know, a week, doesn't really matter. You've been here, you know, 3 years, like some of the people have been in here 3 years. There's setups every single day. Now, are some days better than others? Of course. Even on your worst, toppiest environment day, people are still making money, right? So the point that I want to make is that even if you miss a trade, right? Even if you have that urge of getting FOMO where you want to jump into a trade just because, you know, the market's open, you feel like you can catch this move, that's creating bad habits. And when you create bad habits, it tends to lead to destruction for your emotional mindset, right? It leads to destruction in looking for natural and organic setups that are true, that are patterns that you play. It causes you to start chasing candlesticks. It causes you to start anticipating, right? A lot of times people will get in short, they get trapped, they get stopped out. Immediately they think, I just took a big loss, market's reversing, let me go long. You go long, the chart ends up going back down south, right? So you can put yourself down this slippery slope of chasing price is what I say. We don't want to chase price because, again, remember, I don't care if it takes 1 hour, 2 hours, 3 hours, 2, 3, 4 days before you get your setup. You're going to get your setup. And when you get your setup, that's when you strike, right? That's when you strike. We're not hunters. We're not sitting here, you know, like scavengers trying to, you know, catch every single move. We're waiting for the move that we know based on back testing, based on our stats in what we've actually done, how many trades we've actually taken using that setup, using that pattern. We're waiting for that to arise so we can execute, right? Now, if you have a problem executing on trades because, you know, maybe you're scared, maybe you've taken some losses, maybe the strategy, you know, give you 2 or 3 losses in a row and you're kind of hesitant to take the next one. Trading is just a numbers game, guys. It's a big game of probabilities. Your best strategy on earth might hit at 100% today, and tomorrow might only hit at 20%. But at the end of the week, at the end of the month, at the end of the quarter, are you profitable is all that really matters. You might have 1, 2, 3 days where you just can't seem to get anything going. And the point that I want to make is that when that tends to happen, right, you feel like you've learned a strategy. You feel like you've had some success, and all of a sudden, it doesn't work on one trade. It doesn't work on another trade. It didn't work again. Maybe you blew up an account, restarted. Now you start thinking to yourself, maybe it's the strategy. What else do I need? Is there another indicator that I can use? Is there another time frame that I can trade? You know, what is this person saying on Twitter? What is this person saying on YouTube? Guys, there's a lot of great educators, great teachers, great mentors, great trading books, great everything out there where you can learn. It has nothing to do with that, right? Right now, there's a little bit of a saying, there's some talk in the educational space when it comes to trading. I'm seeing some, I guess you can call them educators or mentors or whatever the fuck you want to call them. They're saying that, you know, trading is not emotional. It is about the setup. It is about the strategy, this, that, and the other. I can pull up nothing but a VWAP on my chart and make money, right? I can pull up, you know, fancy, you know, ICT concepts, you know, smart money concepts. I can throw those on my screen and they're going to make money. I can use something as simple as just a 20 SMA and nothing else on my screen and make money. It has nothing to do with the strategy. Okay, that's a fact. What it has to do with is how much size are you putting on the table? If you're playing 8 contracts, right? 8 mini contracts on this one particular trade, you take a big loss, and your next trade you size down, you're playing 1 mini contract and you take a win. Well, sure, your losses are going to be a lot bigger than your wins. You need to keep the dollar amount the same. Now, the only thing that's going to change is going to be the number of contracts. So for example, I'll just give you a general example. If someone is trading a particular setup that's going to give them a 20-point risk, right? 20 points is what you're going to give up. And you're trading, let's say, one micro contract. If you lose that trade, you're going to lose $40, right? Is $40 going to kill you? I don't think so, right? Is it going to get you upset? Maybe for a split second, and then you're going to be right back in the game. But if you were trading 5 micro contracts, you're going to be down $200. The emotions are going to shift. If you were trading one mini contract, you're going to be down close to $400. The emotions are going to shift. Okay. So you need to figure out, based on your account size, one, I don't care if you trade for prop firms. I don't care if you trade a personal account in your own personal brokerage. How much size are you comfortable losing? Is it $100 a trade? Then you need to make sure your contracts traded per setup align with $100 loss, right? So let's say, for example, I'll give you guys a very easy example that's going to really make sense. Let's say, for example, you're giving yourself a 100-point stop loss, right? How many of us are going to give ourselves a 100-point stop loss? Probably next to no one, right? 100 points. 100 points on one mini contract is a hell of a lot more money than 100 points on one micro contract. One micro contract giving up 100 points is only a $200 loss. You're not going to lose a funded account. You're not going to lose a evaluation. You're not going to blow up your personal account, and you're giving up 100 points. 100 points on a particular setup to work out. Meaning, I'm going to allow this trade to go down 100 points before I go into the green. The odds of that happening are slim to none, right? They're slim to none. So it's position sizing that leads to bad habits. It's position sizing that leads to blowups. It's position sizing and how many contracts you're playing because you're trying to make $500 a day. You're trying to make $1,000 a day. Guys, I get it, right? I get it. It's flashy when you pull in those $1,000 days, right? The odds in the reality of it is you're not going to do that each and every single day unless you have an account size that permits you to make that much money. You know, half the time people are trading prop firms and they're on a $50,000 account, a $25,000 account. They're trying to make $500 a day, $1,000 a day, every single day. Do you know how hard that would be to do? Your investment in the entire prop firm altogether is between 20 and 50 bucks. But you're trying to make $1,000 a day. Does that really make sense to you? Can I go put $50 in a personal brokerage like TraderVate or Ninja Trader or Iron Beam or any of these other AMP futures, any of these other futures brokers? Can I put $50 in there and even get remotely close to making $1,000 a day? No, because for one, you need intraday margin available. Two, you have to have the money to cover. And three, you're not even going to be allowed to trade that many contracts. You know, if you put in $150, $200, $250, $300 into a personal account, you're going to only be able to trade one micro at a time. So how much money, we're getting a nice breakdown here, guys, through 17,663, which is that pre-market lows. Getting a good flush here through 17,663 through those pre-market lows here. Active 20 play is in play here. So that's to kind of put things into perspective, right? So, start small, trade 1, 2, 3 micros at a time, make 50 bucks, make $80, make $100. When you make that, stop, come back tomorrow, do it again. At the end of the week, at the end of the month, you're going to see that, even making, $80 to $100 a day can be around an extra $1,500, $2,000 a month. Now, again, I know that that's not life-changing cash. Guys, if you're in this short trade here, be careful. It's going to bounce. Anytime you break a level, it puts in a new low, it bounces back up, it starts to test the resistance. And if it's going to be strong, then it's going to continue down. The next target would be looking for something around 17,608. Again, if you took that flush on a momentum move, right? Because again, I've taken these plays many of times too, where we're breaking down, price is getting fast, it's aggressive. Think, get in, get green, get the heck out. Okay, like consider it like, you know, someone just tossed you a piece of, you know, they tossed you a bone, right? The dog's looking at you at the dinner table, it's saying feed me, feed me, feed me. You throw them down a bone, you know, whatever, right? Didn't make them work for it or nothing. That's what that is. You know, it is what it is. So again, make sure that when you guys are trading size that you can handle. That's one thing, you know, that's one thing. But anyways, let's get back to the charts here. So if I look at this morning's price action at 7:35 a.m. Pacific Standard Time, we broke through first hour highs. Okay, we broke through first hour highs. Now, when we break through first hour highs, right? We break through first hour highs. Do we take this first move? Right? The answer should be no. We never take or jump the first move. So if we're looking at the first hour highs, we're looking at the first hour lows. As soon as price breaks, it doesn't mean get so excited you jump in. Because a lot of times, once this move happens, it breaks, it pulls all the way back, right? If you even look at this candle, look at how we broke price and then it pulled right back, right? So if you really start to look at from high price, when we broke, your entry would have been in above 17,699. It pulled all the way back to 17,683. It pulled back 15 points. 15 points. So imagine if you were long 2-3 mini contracts and it pulled back 15 points. Guys, you're down 200, 400, 300, 500. That creates emotional stress that you can't handle, only to see the move continue to go in your favor. Like, how many times has that happened where you take a trade, you get into the trade, it pulls back, next thing you know, you get panicked, it hits a stop loss because your stop loss is too tight, and then the darn trade goes in your favor, right? If that is happening to you, you're trading too big a size. You have too many contracts on the table. You should be able to get into a trade and allow yourself to be stopped out, and you feel nothing because you already know how many points you're willing to risk. So on this one particular trade, as soon as we break the first hour highs, okay, we need to put in a new high. Great, we've got that. Now we get in when we confirm that new high over the first hour highs. Makes sense? So if we break first hour highs at 7:35 a.m. Pacific Standard Time, we confirm at 7:45. So this trade took 10 minutes to set up. You get in when we confirm the new highs, and the first push went to 17,686, or excuse me, 17,716 from an entry price of 17,708. So it pushed up about 8 points. Okay, not a lot. Your stop loss is a previous 5-minute candle low. Okay, does that make sense? So if this is the reason why we're getting into the trade, right? Let me ask a quick question. Just answer it to yourself. What is the reason we are getting into this trade? Because price has broken the first hour candle high range. Great. My entry is going to be when we confirm that new price over the first hour high. Great. So if I'm going to get in here, my stop loss needs to be below the previous 5-minute candle. So I'm going to tell you guys quickly right now how many points you should be risking on this trade. If your stop loss is going to be a previous 5-minute candle, you're risking close to 27.5 points. I'm just going to call it 30 points. You're risking 30 points on this potential trade. Okay. You got to get good at math, and you got to get good at math quickly, right? If I'm going to risk 30 points on this potential trade, 1 micro is $60 loss, 2 micros is 120, 3 is 180, so forth and so forth, right? So again, how much money are you willing to risk on this potential trade? Is it around $100? Then go take 2 micro contracts and look for something close to a 1-to-1, right? Something close to a 1-to-1. Now you can take a 1-to-1 as far as if I'm going to risk 27 points. If I start making 20 points, 25 points, I'm going to sell out. 27 points, I'm going to sell out. Again, just because you're risking 27 points doesn't mean you have to actually hit 27 points exactly, right? Take profits off at 24. Take profits off at 20. If you see it stalling and you're comfortable with those gains, take it off, right? Or you can use a 5-minute ATR, which ATR is just average true range. I got it down here at the bottom. The average true range was also 28 points. So we're looking for something close to around 25 to 30 points on this potential trade. These are things that you need to know and understand before you even take the trade. Okay, we can't just say price broke first hour highs, I'm long. Okay, then what? How many points are you looking to take off the table? Where's your stop loss? How much are you going to lose if this trade loses? You should be able to answer those 3 things before you even take the trade. And it takes 10 seconds. It takes 10 seconds. Price out, first hour highs are broken. Great. Previous 5-minute candle is 30 points down below. Great. I'm losing 60 points per every micro I trade. Great. If I make money, anything over $100 on this trade, I'm going to consider selling. If I make anything over $150 on this trade, I'm going to consider selling. So forth and so forth. You wait for it to confirm, you get in, you do nothing. Set your stop loss. You can set your stop loss one of 2 ways. For me personally, I never use limit order stops because I like to wait and get stopped out on a candle close. Now, sometimes, does that mean that I lose a little bit more? So for example, if I'm going to risk 30 points on this trade, maybe I lose 40 points. Sure. But I just like the extra added confirmation. Some people don't like that extra added confirmation. They just want a hard level. So set a hard level below the previous 5-minute candle stop, or 5-minute candle low as your stop, right? So if price breaks down below that, well then, okay, you took your 30-point loss and you move along with your day, right? If you're thinking that 30 points is way too much risk, there's only one reason why you're thinking that, because you're trading 1 or 2 micros. I mean, excuse me, 1 or 2 minis or 3 minis or so forth. Sure, if you take a 30-point loss on 2 or 3 mini contracts, it's detrimental. You could lose an account very, very quickly in one trade. It's not worth it. The only way you can trade minis doing that or using this type of system, this type of strategy, is by what I say a lot in here. Setup happens, get in, get green, get out. So essentially you would be getting in on this candle that you're the confirmation candle, and you'd be getting out within 5, 6, 7 points. That's it. You're looking to make 5 points here, 5 points there, 10 points here, 10 points there. That's what you're looking at. We can also go through the 20 SMA play setup that happened here as well, right? 7:25 a.m. closes over the 20 SMA. Your confirmation candle was the next candle at 7:30. You would have actually been looking to take profits into those first hour highs, okay? Those first hour highs. So you can look at it one of 2 ways. Obviously, you could sell half size, hold a runner. You can sell all size there, whatever. But the theory of technical analysis, guys, and supply and demand is you sell into next area of supply. So if we break supply being the 20 SMA, we confirm on the following candle and you get in, you're looking to sell into the next area of supply. Okay, that's how supply and demand works, right? I'm not going to be an idiot and think that we're just going to break and magically go all the way up here. I have no idea that this is happening. I have no idea that it was going to run this high. All I know is that when we confirmed over the 20 SMA, I can take profits into the next area of supply. Does that make sense? So again, do sometimes we catch this move all the way up here? Sure. But normally it would be because, let's say I'm trading 5 contracts and I'm selling 3 here, holding a runner, using some type of break-even stop, and I'm just letting it go. That's it, right? That's the only way that you can catch a bigger move like that. Guys, since we've broken down these pre-market lows again, we're creating a little bit of a floor here. So what you would be looking at is low price of 17,642 to get confirmed. Maybe you've got a little bit more room down. I would treat it as a scalp. I wouldn't get too greedy on it. I just look to add to your already existing winning day. There's also another setup here. Some of the guys that have been in the room for a while, we've got a member in here. The username is Biggs. We call him Biggs Bottoms. It's just mean reversion trading. So if you look at the open, look at the flush, right? Look at the lows of 17,552. Notice how there's no continuation through that. You need green candle to take out red. This candle is red, right? Even though this candle here, the color is green, it's red. Why is it red? Because it hasn't taken out a previous red candle, right? The momentum is still down on that move. Anyways, once you get these type of candles, you can do one of two things. You can use the low of day as a hard stop, max pain, because obviously if this bounces, gets rejected, and then crashes through, you want no part of that long. But if you see a washout or you see a big pop, you see no follow through, green candle taking out red, you can get long. Okay, get long. Max pain would go at the low of day, and you can essentially just sit in it until you feel comfortable, or you can treat it as a scalp. Get in, get green, cash out, right? It all depends on the style of trader you are, and it all depends on how much risk you have on the table. Now, if I put on, let's say I was going to be willing to risk 40 points on this potential trade, right? 40 points. I throw on one micro contract, I'm going to lose 80 bucks. So I'm okay with just holding this because the max I can lose is 80 bucks, right? Is $80. So I'll just hold this until I make 80 bucks at least. That's a 1-to-1, or see if I can get 100 bucks off of it. That's it. Great trade. So as the day goes on, you want to, guys, we're confirming the low price here. I don't know if anyone's in this short. We've got room down to 17,608. 17,608. If you are in this move and you are treating it as a scalp, your entry should have been below 17,642, and we just hit 17,630. That's 12 points. So, you're trading 5 micro contracts, you pick up 10 points, right? It's not bad. That's an $80 trade. But it all comes down to the mindset, because we do have demand in this area, right? In this zone. It doesn't have to get to 17,608. It doesn't have to get down here, right? It doesn't have to. There's a good chance that it does, but it doesn't have to. So when you take these type of breakdown trades, you have to have the mentality of protecting what's green, right? The only thing you can control, good flush here, guys. The only thing you can control is when you click that buy and sell, right? So if anyone, I would like to know if anyone, you guys can just type it in the chat. Did anyone take this short position here? Coming right into demand. Right into demand. I would.
If only a handful of people have ever done, you just kind of take that for granted, I think, I mean, look at my mechanics here on this last pitch, and then you look at it like, 10 years later. I mean, I'm just all over the place, just throwing the ball. And that was in 1990.
We're real close. If you guys are watching my screen, look how close we are to this previous day low again, 17,608. So if I start to look at the whole body of work here, we flushed through yesterday's lows. Buyer stepped in, we bounced. Now we're pulling back to yesterday's lows. Okay, now we're pulling back to yesterday's lows. If the bulls hold this area, that could tell us that the bulls do want to bounce this going into close the week. Okay, what would be your big area for the next short opportunity, whether it's tomorrow, whether it's next week, is going to be off of this bounce that we have setting up here. We do get a pop that does not take out the previous swing high. Okay, that does not take out the previous swing high from earlier today, and then comes crashing through today's low of day. That's your new short position from a macro perspective. Does that make sense? I hope that makes sense.
I don't think that was around it.
So as you guys are also sitting here, and as you guys are also watching the chart, you need to be going over scenarios, right? Scenarios. What did the market do? What is it doing? What could be the next potential move? You need to kind of see these things play out, and then once they confirm, have that confidence to take those trades.
See you in these pits, photography pits and stuff like that on the sidelines of these ball games. 6'10",
yeah. Jeez. I've been doing this since I went to college at USC. I studied photojournalism then, and I worked for the college newspaper and got a better understanding of photography and
Does
all
anyone
that.
have any questions on any particular setup?
To my career that was about ready to happen, and I had
any questions at all? You guys can put them in the chat.
Because I knew that was I was hoping that would be my livelihood, not photography. And luckily, baseball worked out. And then after, baseball came to an end after 22 years, Then I, dusted up my camera and started going on some trips. And the next thing you know, I've been to Africa 6 times, and I've had.
Guys, notice how we stopped almost to a T here at the 17,608. And these are just supply and demand and levels, previous levels that I've put on my chart. I want to show you guys something here. We take everything off my chart and we go to my big chart, right? Go to my big chart where I've got all my moving averages and stuff. And you see where we came down to on a 1 hour time frame. Zoom this up. How many of you guys have heard me say in the room since you guys have been here, previous day low, or excuse me, previous hour candle low, previous hour candle high if it confirms it's got room? Look at the previous hour candle, okay? Look at the previous hour candle. Came down and tested this green line here. This is the 5 SMA on a 1 hour time frame. Came down and stopped right at demand, okay? Yep. Look at what we also have here. First close back below the 20 SMA as well. So if we confirm previous hour lows, we have room down to the next area of demand, which was the lower Bollinger Band on a 1 hour time frame, 17,620. Guys, I only look at 2 time frames when I'm trading. 1 hour time frame for macro Confluence, and a 5-minute time frame to manage and enter trades. That's it. What are we doing on the 1 hour time frame? And how can I manage myself on a 5-minute? That's it. Okay. Not really pulling up the daily chart, not really pulling up a 15-minute chart, not pulling up a 1-minute chart ever. 2 charts, 1 hour, 5-minute. Look at how beautiful this play is. If I was to like analyze this price action on NQ, we got a flush, we washed out, we had a dead cat bounce into the 10-day moving average on a 1 hour time frame. Great. It did close back over the 20 SMA. Great. We got a little bit of a sweep of the highs. Okay. A little bit of a sweep of the highs. From the candle that closed over the 20 SMA on a 1 hour time frame, 17,731. That went and swept highs, 17,746. Not a whole lot of room, 15 points. Okay. Got rejected and started to sell back off. Once it sold back off 8 a.m. Pacific Standard Time, we now have a confirmation of the previous hour candle lows with space. Okay. Again, you can't just take every single candle that confirms over under previous candle. It's got to have space. It's got to have space. And what I mean by space is if we look at the 5-minute SMA on a 1 hour time frame, it's right here at this low price, 17,683. So looking at this chart, what's my next area of demand? It's the 1 hour Bollinger Band sitting at 17,633, right? 17,633. So if we confirm 17,683 to 17,633, this is a 50-point gap, right? A 50-point gap here. You see this space? 50 points. Is there enough room to take a trade there and make money off 50 points? Sure. Do we have to make the whole entire 50 points? No. But if we confirm, we have space and a plan to take profits. And you can use that entry on a 5-minute time frame. So for example, once you see this 1 hour candle close at a level of demand, what you can do, I'm going to mark this out here. What you can do is mark out the lows. There's the lows. Go over to your 5-minute time frame and look for confirmation. Right? So once we break through
This estimation needs to
the
go back
previous
15
hour
years.
lows on your 5-minute time frame, you're going to see that we had a last bit of support at this linear regression. Okay, so once we break through, wait for a confirmation, use a previous 5-minute candle as a stop. Okay,
Yo, all the chips on in the dungeon right now, except for SMC.
entry should be here or here. It does bounce against you. Let it consolidate and then look at what it does once it starts to really confirm. Once it confirmed through this linear regression channel here, again, this chart's very, very hard to look at for people who don't have this setup. But anyways, once we do confirm, look at the washout, right? I mean, look at the washout. Straight down. So that's how using the 1 hour time frame can give you confluence on your potential setups as well. Okay, on your potential setups as well. If you also, say, well, forget all that. That's nice, but it's a little bit too confusing. $20 SMA play. Confirms. Does bounce against you. Does, look at this is where people get confused. This 20 SMA play confirms here, bounces, and actually does get over that reason why. Okay, which is why I say I gotta have the candle close, right? If that means I have to trade less size so I can see it play out, I've got to see it play out, right? I've got to see it play out. Because how many people that maybe set a hard stop loss, boom, got wicked out here and then just watched it flush? Do you know how upset you would be? You know how upset you would be because you're in the right move. You're in the right move. Your stop loss is too tight. Okay. So realistically, how many points are we looking to give up on this one potential trade? The range here was only 17 points, guys. 17 points, right? It's not that much. It's not that much. High was 17,706 and it went up to 17,712. So if you were giving up 17 points, you gave up an additional 5-6 points, putting it at 25 points. One contract, one micro is $50 loss, two is $100 loss, three is $150 loss, so forth and so forth. 4 of them is a $200 loss. It's not that much money, right? You can trade 4 potential contracts here. Now, if this candle would have closed, over your reason why, then yes, this is a stop out. Okay. That's a stop out. Then you would have to just eat the bullet on that and take the loss. But it never closed. Never closed. And I want you guys to also remember one thing too. When you get these breakdowns like this and it starts to reconfirm the 20 SMA short, and you do get like this little kind of false breakout here, what's the previous swing high? Previous swing high is here at the high of day. Is this bounce significant to where it took out the previous swing high? No. Boom, baby bounce, continuation for a nice flush. Okay. A move to be invalidated needs to take out a previous swing high. Okay. Even if this came all the way up here, it could put in a lower high and then still come down. So get familiar, get comfortable with risk and with not having such a tight stop. Okay. I'm just going to back test a couple more and then I'm going to end this. There's only been, since the market has opened, 2 20 SMA plays. How many people were patient to take the 2 20 SMA plays? Forget about first hour highs and lows. Forget about yesterday's highs and lows. Forget about, whatever. Forget about everything. Make things simple. I'm only going to take 20 SMA plays when they confirm. This one confirms. Range was 32 points. Never closed below it. Confirmed. You should have made 32 points here. You should have made at least 20 points, 25 points here. Simple. 50 points should have been grabbed out of the market today. Only looking at the 20 SMA plays. not even realizing where yesterday's highs or lows at, not even realizing what the, first hour candle range was. Not worried about nothing. 2 setups, 2 for 2, should be done trading on the day. If you're still trading right now, the question is why. My question is why. And you need to get into a habit as well of asking yourself, it's 10 a.m., lunch hour's over, market's been open for about 4 hours now. Did I make money, yes or no? The answer is yes, you guys should be off doing something else. Whether it's your 9 to 5, whether it's walking the dog, whether it's going to the gym, whether it's going back to bed, I don't know. But if you've made money in the first 4 hours, why are you still trading? And more times than not, it's because someone is greedy. Well, I've had some success today. If I just take that one more trade, I can make a little bit more. And then what tends to happen? You tend to give it back. You tend to give it back. This game is about protection, okay? Protect what you have, because that's all you can control, okay? Now, if you haven't really taken any trades at all today, because maybe you're thinking, well, the market is choppy, I don't really see a lot of follow through, it's just going back and forth. You need to start analyzing what you're actually looking for. Because are you actually looking for setups, break of first hour highs or lows, break of previous day high or low, and 20 plays? Are you actually looking for those setups, or are you just hoping that you see one of these type of moves? Right? You see one of these type of moves where it's just easy to see it, or one of these type of moves. Those hard trending days, right? Those days don't happen every single day. Those are hard days. Those are hard days to find. They're far few in between. Okay. You get one a week, maybe. The rest of the days, it's like this. You put in a little bit of a washout, you find a little dead cat bounce, you put in a high, gets rejected, puts in a lower high, and then flushes back down, puts in a lower high, then comes back up. Majority of trading days are like that. So you got to get in here, make some cash, get out. You got to get in here, make some cash, get the hell out. You got to get in here, make a little cash, get the hell out. Call it a day. Make sense? Hope this helps somebody out there today. Give you guys a little bit of different understanding of what I'm looking at in the markets. Does anyone have any questions before I take off? What's hard to do, I'll kind of end with this. What's hard to do is that when you miss this move off the open, it's hard to sit and wait for the next setup. Because the next setup didn't come for almost an hour and 20 minutes. Hard to do that, right? You see price go down, you see people making money, you think to yourself, how come I didn't make money? And then you want to chase every single move back up, back down. That's hard to do, right? It's hard to do. You'll get lucky, you'll make some money sometimes, catching a bounce here, get stopped out, go short, get stopped out, take the 20 SMA play, make some money, think that we're breaking high of day, get stopped out. It's very hard to trade like that because what you're doing is you're just kind of going back and forth, right? You're chasing price, right? It's like you're in a circus and they're dancing you around the middle of the floor, right? Do not be a dancing circus animal. You want to be someone who knows what they're doing, understands your position sizing, understands what it is that you're actually looking for in the markets, right? What you're actually looking for in the markets. And then wait for those things to happen. Okay? Wait for those things to happen. And that's the best thing that you can do. Practice patience. Start with small size. Guys, when I first started trading, my mentor, the person who taught me how to trade, because I kept screwing things up, they made me trade one share at a time. And you know what that did is it allowed me to see the whole play work out to full stop out or full take profit. Now, sometimes I would get into a trade and full stop out would be 60 cents. Sometimes it would be $1. Sometimes it would be $2. Other times I'd make money, the trade would work, I'd make 50 cents. I'd make $2. I'd make $3. Do you know how hard it is to sit there and trade one share at a time, knowing that you could have made $100, $200, $300, $400? That's hard to do. But what it does is it builds a level of tolerance to where you don't care about the outcome, because you know that there's going to be losing outcomes and there's going to be winning outcomes. And what it teaches you to do is just move on to the next one. I need to move on to the next one and continue to take these trades and continue to grow over time. So for people trading futures, I would recommend, to be honest, until you get so bored and so good at it, you're only trading one micro contract. One micro contract, you make 10, 20 bucks, sell it, stop trading, come back tomorrow. Do the same thing again. You lose 10 bucks, you lose $15, stop trading, come back tomorrow. Force yourself. But the majority of people out there will not do that because it's not worth their time. It's not worth, wasting hours or wasting, valuable, precious time to make $10, $15, $20 a day, because other people are making $500 a day. Other people are making, $10,000 a month, or whatever the case may be. I make $300 a day on my normal day job, $200 a day on my normal day job. Why would I waste my time for 20 bucks? Because you're trying to learn a skill set. You're trying to learn a skill set that is scalable to infinity and beyond, as Buzz Lightyear would say, right? You want to make more money in this game, all you have to do is have a bigger account size. All you have to do is trade more size. But the majority of people want to get to trading that big size and making all that money before they're emotionally even ready to take those losses. Because when you take $1,000 loss, like guys, right now, personally, if I take a loss on the option side of things, my minimum loss is anywhere between $300 and $1,000. Minimum. But that's a risk I'm willing to take based on my level of experience, my account size, my emotional tolerance. And when I do hit a winning trade, I can make that the same amount of money as well. Now, if I'm switching to options talk here, but let's say someone had a $2,000 account that they're trading options in, and they go out there and they try to buy 5 contracts, 7 contracts, and take a $500 hit, you're out of the game in 2 or 3 losing trades. 2 or 3 losing trades is nothing on a grand scale of things, on the grand scheme of things. You need to be able to take 10 losing trades in a row and still have money to trade. That is letting yourself know that you're sized appropriately to even be in this game for a long time, to have longevity in this business. The odds of someone losing 10 trades in a row is very, very slim to none. Very, very slim to none. Losing streaks do happen, 2, 3, 4 trades at a time, but the odds of you losing 10 trades in a row is slim to none. Okay? And one day you can make back 2 or 3 losing days. Also, one trade can give away a week's worth of profits. Remember that. With that being said, nobody has any questions. I'm going to log off here, end this video recording. I'll do these a little bit more frequent, where I'm kind of going over price action and some of the particular strategies. Right now, I just kind of wanted to go over how I set up my charts. Going forward, I'll kind of just have the charts already set up and then go over the most recent price action to see if we can catch some newer trades that we're forming in the market. See you guys all in the room. If you guys have any questions, just make sure to type them in. Catch you guys later.